Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. So glad that you were with us on this Friday. Up next now, here we have the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Good to see you both. Alan, tell me a little bit about how you're feeling about a market that has been bumping up against new highs. And we just got this jobs report. How do you feel overall? I know you look more at technical analysis, but do you get a vibe?
Well, for me, there's nothing new here. We made new all-time highs once again today. So I think that's 32 so far here in 2024 if you just look at the S&P. And I was in with Ben this morning on the Futures Show, and I want to point out that good news is good news. And we've made new highs once again, and the market continues to move forward. It is strong momentum until proven otherwise.
Right, understood. All right, so let's get to your trades because I know you have a few here. First, let's start with APA Corp. Why is this one jumping out at you?
Well, again, being on the Futures Show, this is a commodity play. You know, this is an everything bull market, and it's about risk reward. So if we look at this particular stock, it's just made some new lows. So Ben's not going to like this chart, but he might like the premise and the probability of the option play. So what we've seen here is money flow into this stock, and I've also seen new lows, but not new highs in implied volatility. That's a sign of a sentiment shift because you would think with a stock making new lows that the volatility would be increasing with more fear, but that's not happening. It's down 45% from its 2022 high. So again, it's about risk reward. And if you look at the crude sector, or the energy sector in general, crude oil and natural gas, they both have a lot of upside potential. So I'm looking at the fact that we've been trading between mostly 30 and 35 in 2024. We've dipped down below that a little bit. So I'm looking at an October option, October 25 calls, traded for about 5. It's $4 in the money. It's got 4 months of time, an 80 delta. And if we just get to the top end of the range that we've been in, this option will gain 100%.
All right, so a bullish call here as it's hovering around these lows. Let's see what Ben has to say about the chart, please, Ben.
He's not going to like it.
No, I don't at all, Alan. You're right. I agree with you. If we get to the top of the range, then that would be a good trade. The problem is right now we're kind of working our way through the middle of the range here, which opens up a door for the test of the lower extreme of it, not the upper. We'll get into that in just a second. First and foremost, let's look at some of that selling we've seen as of recent here. As Alan mentioned, and Nicole, I do not like this one because across multiple time frames, we've got a bear pattern playing out. First and foremost, exactly what we always look for, that high conviction trade. It's on the left side of your screen. Stock sold off from 30 down to 28, and it's been sideways since. There's no rejection this lower level. The selling that we saw, again, to begin the week. I got a 5-minute candle chart here, and this is just what's been going on since Monday. Again, not the week that the bulls were looking for. Currently bouncing around 29, 30, we'll call it. You're going to see this is a key area as we kind of step away from this more intermediate, or I should say more granular look at price activity into a more intermediate. So from a 5 to a 1 hour now, but look, almost an identical pattern. High conviction, left side screen, sideways consolidation, range bound, accepting the lower level that we found after, well, here on this hourly candle chart, you can see we moved from up around 33 down to, again, that recent low I just pointed earlier this week, 28.67. Here again, 29, 30, a key area, well-defined upper, well-defined lower extreme, but balance forming, acceptance of this lower level, simply put, no rejection. If we were rejecting this thing, we'd see a V bottom, we'd be taking out key areas that were established on the way down, we'd be taking out this double top, triple top that's playing out here, but this is a market right now that's just in a holding pattern, waiting for more information in a longer-term downtrend. That's why I don't like the intermediate, the short-term, or this longer-term either. It's a well-defined trend lower since the spring of 2008. From up around 150, that was a pandemic low that we saw down around 5, if you remember. Here it is, currently in balance, forming, again, 29.30 is the key area. Now, Alan's right. We're in a random phase here. We could come off this in the middle of this range, work our way towards the upper extreme, but this is my earlier point here. We're now working our way through the middle of it, which I always say opens up a door for a retest of the lower extreme.
Right, it's pretty amazing. He's pretty adamant about not seeing the rejection here, not seeing the shape and changes needed to turn this around. And Alan?
I thought I would get some love because it's a commodities play, but I guess not. I'm an options trader, and this is the way that I look for sentiment shift changes is I buy limited risk options with plenty of time for development, something deep in the money, Being long from 25 is $4 in the money. So my expiration break-even's $1 away. I like the math behind this. And you know what? This might be a sandwich bet that we'll have to come back to as we get closer to expiration. I only need a modest move in the underlying stock to make big gains with this option.
Yeah. All right. How about we get to JD.com, which really came up off the lows. It was down to 20 bucks. It's at 29 right now. You know, it started to do this climbing back since February, but just couldn't really, get going. Where do you think it's headed and why?
Well, this is the second one for a key reason, because this one had the exact same pattern that the previous stock had back in when we had the lows in January. So we had the bullish divergence where it made new lows in January, but not new highs in implied volatility. That was a sign of a bottom, and it had a big bounce. Now we're getting a second chance in this stock. This is another setup. We made some money, and I know we had this on the show before, this JD.com. This did very well. Now you use the rips in the markets to take profits, and you want to buy the dips. So this stock has been between 20 and 40 for a year. So 30 is an important pivot that we're sitting right around right now. It's come back down 15% in the last couple of months, but it's still 45% off the low. So it's a momentum stock that's had a bit of a pause. So what I'm looking for here is I'm looking at the September option. Again, it's trading almost the same price as the last stock, but the volatility is a little higher, so the options are a little bit more expensive. I'll buy a little less time, so now I have 3 months. September 25 calls trading for about $6, and again, that's nearly $5 in the money. And so we'll see if we can get a secondary rally in this stock, because China has made a evident comeback, and now we've seen some profit taking, as we did as well, and we're using this as a second chance to get in a strong stock.
I wonder if this is a go nowhere fast type of thing that you're talking about here, and you see the opportunities. Ben, let's talk about this chart.
Unfortunately, Nicole, about the only thing I agree with there is the $30 level part of it and the significance associated with that. I mean, this is another pattern that we're seeing bearish across multiple time frames. No indication we've rejected these lower levels. And while we could see some randomness on that longer, that wider, bigger picture type chart, let's just take a look first and foremost at some of the weakness on the short term. And you'll see exactly why I'm a little bit having a hard time subscribing to that bullish narrative there. High conviction throughout most of this chart over the last couple weeks, trading down to 29 and then sideways since we've bottomed out there. I do want to point to, as we take a look here again, I've got a 60-minute candle chart. I figured we could start off with a bit more intermediate time frame here. Within this pattern that we see, high conviction to the downside, you're going to see this kind of a L-shaped type pattern repeat itself multiple times over and over again. And then, again, as you zoom out, bigger picture just plays out here. Yes, as Alan mentioned, 30 is significant. Let's step away from the hourly candle chart, get into a little bit more of a longer term, adding some time on, but almost an identical depiction, right? High conviction, left side of the screen, balance forming. Again, another example where the bears are in charge. This is a daily. Let's get into it here. You can see 30, the significance associated with it. Now, yeah, we could start to build something to the momentum, to the upside here. We got a series of higher lows coming into play, but until we take out 37 right now, and we just tested that. That's why I'm, again, sticking and giving the benefit of the doubt to the bears here, because a failed attempt to retest that key level really just solidifies the working assumption that we are in a trend lower here off that 2021 high. That was up around 107, if you remember. So now we've gone from a look at the hourly to the daily and some of the price activity this year to now adding some time on all the way back to 2021 when the stock was up around 107 and then briefly down to $22 to begin the year, currently in a balance forming. Again, I got to end on a positive note. I agree with Alan, that $30 level's key.
You're trying to be positive. Okay, we'll take that. It's interesting because, as I said, it was sort of doing nothing, and then it gave this big chance here. It's up 19% in 3 months, but it didn't move up and then pull back. So year to date, if you look at it, it's virtually flat. It's like up 2%. So, Alan, final thought on that, and then get to Canadian solar.
Yeah, well, if you look at JD.com, it did rally from 22 to 35. So that's a That's a big, big move in percentage terms, and even a bigger move if you go into the show archives. I know we talked about this as an option play, that a modest move, a 5% move in the underlying stock can produce 50% gains in options and 100% gain in the money options that I trade. So it's about the math, and it's about the probability, and it's about risk reward. And in everything bull market, I like these kind of positions.
All right. Last but not least, we're looking at Canadian Solar, which ooh, that's a tough chart when you look at it long term, from 41 down to $14. Where do you think this is headed and why?
Well, I've seen some of these stocks. First Solar is actually up 40% on the year, and if you've seen some of the others, they've come back to life, so to speak. I guess light would be the right word. This particular stock is down 50% since this time last year. So again, it's about risk reward. It's bounced 30% off its April low, and we've been trading between 15 and 25 here in 2024. So 20 is an important pivot. We're very close to that. A push above 20 will get this started and move to that 25 level again. My key indicator, my money flow indicator, I see leverage long positioning in this stock. And we also had that bullish divergence low in April, and it's bounced off that low. So I'm looking to play an October option, October 15 call. Again, it's the low is 15. Trading about 450. It's 350 in the money or so. And if we just get to the top of the range at 25, this option gains 100%. It's about the math for the sun to shine.
Right. Well, if you can get this bullish move. Let's see what Ben says about the technicals. Ben?
Alan. Okay, let's shed some light on this one. The trend is lower here as well. Multiple time frames, unfortunately, Nicole. I got to push back 3 for 3 today, unfortunately, here on 360. Let's take a look, as we did with our last two examples, work our way from more granular into a bigger picture time frame. You're going to see exactly what I'm talking about. First and foremost, the 5. It's $21 to begin the week, all the way down to $17.83. This does not look like a stock that is shining very brightly on the bulls at this point. It has been and continues to be coming off. This is just an intraday basis chart, so we're not going to make too much of it, but I do want to point to different phases of development and value, which in this instance is moving lower, right? You can see. And in fact, we could even break this down if we wanted to. We could establish two separate areas here. I kind of just clump this all together as one around 1830. Tough to trade the 5-minute candle charts. Let's step away from that and get into an hourly. Similar depiction, right? Top left, bottom right, no rejection of these lows that we've seen recently. We're talking back in April. Take a look. I went ahead and just drew some of these areas that my eye was drawn to, and it was really this kind of larger area here around 17. You got lower extreme around 14, upper extreme around 21, 22, we'll call it. So smack dab in the middle, here we are. Look at this, hanging out right around 17. Very random within this range, but in a longer-term trend to the downside. We've seen a series of lower highs, and then most recently, look at this. We just came back up and tested that $21, $22 level and failed again. So again, by definition, a trend to the downside is going to have retracements that are short-lived. They test extremes, and by definition, you spend a very limited amount of time on them. Stepping one more time away from these more granular intermediate charts to a bigger picture, longer term, pretty well-defined trend lower off that 2023 high. We saw up around $46, bottomed out around 14 back in April, if you remember. Appears to be forming balance around that $18 level. Now again, a third example of a stock that's in a range, right? You've got an upper and a lower extreme. We could see some opportunity within this range. I think that's what Alan's trying to take advantage of here, but I'm just pointing out that the longer-term trends to the downside and the bears that have been sticking with these three on the short side have been rewarded handsomely, and the market's been doing the work for them. They haven't really had to kind of jockey for position and find those opportunities. They just sit back and let the market do the work.
Yeah, and it's interesting how you go 3 for 3 on the opposite side. Look, I mean, that's what makes trading, but I don't know. What do you think about this, Alan? I mean, I know you guys have been going all day long here on this Friday, right. So at least you're having some fun with this too, but this is what people want to hear. They want to hear right. Why, making your case for this and why you're bullish on CSIQ. That's your final thought. Go ahead,
well,
Alan.
I position for success, and I use in-the-money options as a way to put myself in that position. And then I get the confirmation when we break above these key levels. That tells me I'm on the right side of the trade. I'll finish this with two words that Ben never says, but I live by: optimism wins.
He was trying to be optimistic today. I felt some positivity there on this Friday. I don't know. Maybe I was wrong. All right. Well, thank you for shedding light on this. You guys light up my life. Okay, all these good things. All right, great. Alan Nuckman, Ben Lichtenstein, thank you both for the big three today. Coming up next, let's spotlight the path forward for AI as we've seen increased demand for AI data centers and electricity here in the U.S. What we need to know on this big move, the demand is monumental. Stay with us.